Our Sreesankar is head of institutional equities at Prabhudas Lilladher. He's joining us right now. Sri, good morning. Great to have you with us here. So are we likely to witness a few more very quiet, dull trading sessions, very low volumes, Sri, and then market blasting in either direction on the 16th of May?
I think even before 16th of May, you may probably witness some kind of action. My own estimate is probably once the final votings are over on the 12th for the 41 constituencies or so. So you will start to see the exit polls being aired from 6 p.m. post 6 p.m. on the 12th. So if it's going to be giving an indication of what's in store, I think there's a huge difference between an opinion poll and exit poll. Exit poll probably more likely to be reliable, and if that gives an indication of what is in store, then you can start seeing it happening in the market from 13th onwards. So obviously 16th is going to be the D-Day where a large implication of all these things will happen, but I still believe that from 13th onwards you should see some more things happening. So my own expectation is on 12th, what exit polls will give is probably for the feedback on all the constituencies done up to till the 7th.
So you're saying 13th, 16th is important, but 13th we will see a meaningful reaction, is what you're saying?
Yeah, we should see a meaningful reaction on 13th itself. So
and in a way,
16th is going to be the
final result on the 16th is if the final result on the 16th is in line with what the exit polls show, I mean, then 16th could turn out to be a dull kind of day. But there are a lot of ifs floating around here. If this, if that, if that.
Not really. Yeah, if that, etc. So our own view is that what are our recommendations on it? We believe the indications are that you're going to have a stable government. If you're going to have a stable government, a decisive mandate, then market's going to take it as with a thumbs up. If it's not going to be a decisive government, if it's going to be a fractured mandate, we hope it's not going to be a fractured mandate. So if that happens, then probably it's not good for the economy. It's going to be not good for the market over a longer period of time, and market could correct big time. That's other possibility. But given the feedback what we have, we believe the market range today is from 6,300 on the lower side to 7,300 on the upper side. And if the decisive government with a strong any coalition is able to get that magic number of 272 and cross it, then you're going to have a market which is going to give even a thumbs up and we move up from these levels and should be somewhere around 7,300, 7,000 plus levels. Once that happens, then the market is going to wait for two aspects. Going to see who are going to be the ministers. Second, wait for the budget to be tabled. The budget, why it's so important? It probably gives us indications that the policy is going to be followed by the new government, which will determine the kind of an economic growth for the remainder of FY15 and the growth that you see in FY16. So that's when the things will start to unfold. Our own expectation is the market should stabilize at these levels once our budget is announced, etc. Then probably only a lot more changes will happen from September onwards, when the effect of it starts to feel through the ground level in terms of growth or impacts of sectors, in terms of economic growth and order flows and so on and so forth. So we've got an interesting 6 months ahead. That's what I would say, 4 to 5 months ahead at least.
Is it going to be a unpredictable 6 months, or is it going to be as predictable and as straightforward as many are making out to be? That is the question though, Sri, right?
Oh yeah, that's right. You know, if you go back to history, I don't think that in 2004 the opinion polls got it right, or even 2009 the opinion polls got it right.
Yeah, no, absolutely. And the point is, right now the view is kind of herding around to a certain direction which the market will take so strongly, and the view is that, well, markets are headed higher. I mean, some are saying that even if the election verdict disappoints to great degree, markets still knee-jerk reaction can be negative, but it will head higher over a period of time. The pace may vary. The pace of gains may vary.
I'm not sure about it. The simple reason is, if there's going to be a fractured mandate, I think the big repercussion will come in terms of probably a lot of downgrades which may happen on the political front. Should the downgrade happen, then you could actually start to feel the pressure on currency as well, because you still have the oil imports which is still remaining very high. You've managed your current account deficit so far because you have put so much of restrictions on imports, and especially what we heard from Mr. Bhaskar Bhatt just before. So you start to look in those aspects. If you turn the clock back, you've actually got your CAD under control because you have put so much of restrictions. And if there is going to be a fractured mandate, if the money that's coming in, it starts to go out, plus if there is going to be a downgrade, this is going to affect the currency. If the currency weakens, you're going to import an inflation again, which means that you're going to a higher interest rate scenario yet again, and a growth slowing down. And it's not going to be a very good news at that point of time. So I don't know how this will pan out in that environment.
Yeah. But let's just talk about the immediate reaction to the market. What are the best ways to play a strong election verdict in favor of the NDA, in your assessment, Sri?
See, the way we have seen it, there are two aspects for it. If we go back to the market even 6 months back, because no one was sure about what's happening, and probably there was an impact on the domestic economic growth. So people were hiding in defensives. IT and pharma were the defensives, and your currency was also under pressure. A lot of pharma, because of generic plays in India, they benefited from exports and the IT exports. So they were an easy, comfortable place to hide. And FMCG, the consumption story. So now, if the economic growth happens, strong verdict, economic growth is revival, then I'm very clear that the overall sectors will see under ownership, or even a neutral to under ownership, which is already being reflected in IT, pharma and FMCG. All these sectors have underperformed, and the stocks have also underperformed, invariably the bigger stocks. That underperformance has given way to outperformance in capital goods, infrastructure, related activities. So now the key question is, to what extent these infrastructure related story will continue. My thought process, it will run even for the next initial few months. You probably would see a sharp movement even in the infrastructure space, even in the capital goods space, even without any kind of a backing of a growth. In expectations of growth, the stocks will continue to run. So you probably will see an underperformance from IT and pharma continuing, and the outperformance from cyclicals or the beta stocks happening on the other side. That will happen in the near term.
PSU banks, after the big rallies that they've had?
I think the key question is how much one believes in the PSU bank story. Because the way I would rate the PSU banks is, I think a large number of investors would see this as purely as trading opportunities. And it will not be part of an integral portfolio construction over a longer period of time. Well, why I am saying this, if you actually go back and look at a lot of international funds portfolios, HDFC Bank and Axis, etc., probably will be there as strong holding for years together. I don't think PSU banks will figure in that category. So PSU banks would probably, a lot of people would have bought in, and the valuations have become lower. And if the economic growth happens, financial services sector is one of the big beneficiaries, be it NBFCs, be it the banks, be it the other financial intermediary companies, etc. All of them will benefit. So you will also see a reduction or an upgradation of a lot of NPAs, etc., which will happen. So people will play for it, ride that particular rally, and then see. I do not think that PSU banks will go back to the valuations that they were commanding before this meltdown. Probably the valuations what they were having even in FY11, forget what they were having in FY8, etc. I think most of the PSU banks will be sub one-time book, which they will be quoting, and even the best banks in that segment probably will go to 1.2. The largest weighting like SBI may get a premium. That's the only thing, and I think people will be reluctant to pay 1.5 times book, etc. As against what we see for HDFC banks of 3 times book, or a lot of these private sector banks which will be above 2 times book. The PSU banks will continue to be probably peaking out at somewhere around this one-time book, and I don't think most of these banks will get a huge valuation premium. In fact, at any rise over those things, probably you may find people willing to reduce their commitments on those stocks.
Sellers, right. Got that. Sri, thanks for being here. Great talking to you. And
Pleasure.
Appreciate it. Pleasure. Appreciate your time. Sreesankar at Prabhudas Lilladher with his thoughts on the market. Of course, centered around the election verdict, 16th of May. 6,700 on the Nifty, so we're back there. Basically giving back all of yesterday's 14-15 point gain at close. Rupees got past 60, but it's back at about 60.04, so tracking that closely. Sarvendra, I think, is coming up after a quick break. And Sarvendra, I suspect, will start with the currency. So take a break. Be back for Sarvendra on the other side.
I like to focus. I like to discuss. My style, pinstripes. Always. मेरा? Everything else. मुझे business के बारे में सब आता है. और मुझे show business के बारे में. I work hard. I play hard. Okay. India's first 2-in-1 channel.